we had very good engagements with investors all through our process in this, right? The road shows and even in the last few weeks of after the prospectus, etc., was filed. So we were expecting a good response. And we also decided to price it in a way that a broad spectrum of investors across institutions, retail, HNIs see into this. And I think that's what has ended up a very strong performance, like you said. If I use a cricket analogy, I think the pitch was tough, but the batsman hit a century.
And by the way, you also had a bit of global market turbulence, right?
Yeah,
And
yeah,
that can't be good for a primary issuance, any primary issuance, not just yours.
yeah.
But it's, of course, I mean, things look a little more settled, and the issue has, of course, gone through in a good way. So
Yes.
let me begin by asking you, and I'm sure you understand investors, and you got this question from investors who you were pitching the IPO to, etc. And now you'll have to answer to the public market. So
Yes.
let me prepare you with that. What is the road to profitability, Bhavish, as far as Ola is concerned? Look, the opportunity is there. It's a multi-decadal theme. You're the largest player. But what is the road to profitability here as far as Ola Electric is concerned?
So Prashant, that's a question many people have asked us, and I've answered in multiple forums. I can't give a specific answer, as you know, but I would tell investors that just wait for our Q1 results, which will be out soon after the listing on 9th August, and you will get to see the financials then. But thematically, if I tell you, if you look at our business in FY24 over FY23, we grew revenue 90%, and our revenue in FY24 ended up at around 5,300 crores. And our adjusted gross margins went up significantly from, I think, 7% to 16%. And our EBITDA went up from negative 43% to negative 19% in just 1 year. So this shows you the kind of improvement the financials already in the public domain showcase. And this is because, in manufacturing businesses, there are two themes I want to leave with your viewers here. In manufacturing businesses, as you grow scale, and we've seen very significant volume and revenue growth, your cost structure, the factory investments, etc., don't scale linearly with it. So your margins keep expanding as you grow to a certain level of scale. And we are in that process of growing our volumes and our revenue to kind of grow into the volume of investments, capacity investments that we've already done. Secondly, our core strategy has been to vertically integrate, and our margin improvements over the last 2 years has been driven through this kind of vertical integration of manufacturing and technology into different EV components. And the heart of that, the most important one of that, is the cell itself, the lithium cell, which is actually, like the prospectus says, going to be ready by early next year for commercial production. The trial productions and the factory is already complete. And that, as you know, cell is the biggest part of the vehicle cost. So once we make that in India, once we make that in Ola Electric, that will further improve them.